Your grandparents bought a house, raised a family, owned a car, and retired comfortably on a single income. Today, many Americans have two incomes, multiple side hustles, college degrees, health insurance, retirement accounts, and yet still live paycheck to paycheck. How is that possible? How can people work harder than ever and feel poorer every year? The answer may not be laziness, bad decisions, or lack of ambition. The answer may be something much bigger. A system designed to keep you consuming, borrowing, subscribing, and ensuring every aspect of your life while convincing you you're making progress. And one of the most powerful pieces of that system isn't your mortgage, your credit card, or even your taxes. It's something most Americans pay for every month without questioning: insurance. 100 years ago, most Americans worried about food, shelter, and employment. Today, surviving financially requires paying dozens of invisible bills before you even begin building wealth. Health insurance, auto insurance, homeowners insurance, renters insurance, disability insurance, life insurance, umbrella insurance, long-term care insurance. Every year, premiums rise faster. Deductibles rise faster. Out-of-pocket costs rise faster. Americans are spending thousands, sometimes tens of thousands of dollars annually, simply to protect themselves from risks that may never happen. And while insurance absolutely serves an important purpose, it has quietly become one of the largest recurring expenses in middle-class life. Think about it. The average family isn't just buying protection anymore. They're buying access. Access to health care, access to driving legally, access to owning a home, access to financial stability. The result is a strange reality. Many families earn more money than their parents ever did, yet feel less secure because so much of their income disappears into mandatory financial obligations. The modern middle class isn't drowning because they're spending too much at coffee shops. They're drowning because the cost of participating in normal life keeps rising. And insurance is one of the most overlooked pieces of that puzzle. Most Americans believe wealth comes from income. Earn more, work harder, get promoted. That's the formula we've been taught for decades. But wealth has never been created primarily through labor. Wealth is created through ownership. Consider two people earning the same salary. One spends nearly every dollar maintaining their lifestyle, paying insurance premiums, debt payments, subscriptions, and rising living expenses. The other uses part of that income to acquire assets that generate future income. 5 years later, their lives look completely different. One is still trading time for money. The other owns things that work for them. Here's the uncomfortable truth. The financial system rewards asset owners far more than workers. Insurance companies understand this better than anyone. They collect premiums from millions of customers, invest that money, generate returns, and build enormous wealth while policyholders hope they never need to use the product they're paying for. Again, insurance isn't the villain. The model itself is brilliant, but it exposes a lesson most people miss. The biggest money isn't made by buying financial products. It's made by owning the systems behind them. And until middle-class families understand that distinction, they'll continue running harder on a treadmill that never actually moves them forward. Many Americans feel successful because they have a good salary, a nice car, a bigger house, and comprehensive insurance coverage. On paper, everything looks impressive, but beneath the surface, something troubling is happening. Every raise creates a bigger lifestyle. Every upgrade creates a bigger obligation. Every milestone creates another monthly payment. The house requires homeowners insurance. The newer car requires higher coverage. The growing family requires larger health plans and life insurance policies. Income rises, but expenses rise right alongside it. This creates what economists sometimes call the middle-class trap. People appear wealthier while becoming increasingly dependent on future income to sustain their current lifestyle. One job loss, one medical emergency, one economic downturn. Suddenly, the illusion collapses. This is why so many households earning six figures still experience financial stress. It's not because they're poor, it's because they're fragile. True wealth isn't measured by how much you earn. It's measured by how long you could survive if the income stopped tomorrow. And for millions of Americans, that answer is far shorter than they'd like to admit.
The solution isn't canceling all your insurance or abandoning financial planning. The solution is understanding the difference between protection and wealth creation. Insurance protects what you have. It rarely creates what you don't have. Yet millions spend years optimizing protection while neglecting ownership. They compare policies, they compare deductibles, they compare premiums, but they spend very little time acquiring income-producing assets. The wealthy approach money differently. They view insurance as a defensive tool, not a wealth strategy. Their primary focus remains ownership, businesses, investments, real estate, intellectual property, cash flow assets, things that generate value whether they're actively working or not. That's why the gap between workers and asset owners continues growing. One group spends most of its energy protecting income. The other spends most of its energy building systems that produce income. The difference seems small at first. Over decades, it becomes enormous. The middle-class trap isn't that people work too little. It's that they spend their entire lives defending money they've already earned, instead of building assets that create new wealth. And until that changes, the cycle continues. Working harder is no longer enough. In today's economy, income provides survival, but ownership creates freedom. Insurance can protect your financial life, but it cannot replace the wealth-building power of assets. The people who escape the middle-class trap learn to spend less time defending income and more time creating systems that generate it. But what if the biggest threat to your financial future isn't debt, inflation, AI, or insurance? What if it's something even more powerful? Something designed to influence nearly every financial decision you make without you even noticing. Every day, millions of Americans spend money they don't have on things they don't need because of a psychological system engineered to keep them consuming. And the deeper you fall into it, the harder it becomes to escape. Next episode, The Consumer Trap: How America Was Programmed to Spend. See you in episode 6.